if employers provides an accommodation to an employee, the taxable benefit is the annual value of the property. This is rateable value. Some times ago, they rated all of the value properties in England, and they say, "Oh, this is their rateable value." They're quite outdated now. For example, a house could be rated at £7,000, so they're quite outdated. However, they're still used. So the annual value of the property, that's the cost of the building. However, if the employer rents the property rather than owns it, then it will be the higher of the annual value of the property, or or the rent paid by the employer. The taxable benefit is reduced by if any contribution is made by the employee. And then there are expensive living accommodations. There is an increase if the value of the property is more than £75,000, then any excess is a benefit in kind, and that will be payable by the employee unless any contribution made. So the rate is 2.25% of any excess. The increase in the taxable benefit is calculated by applying the official rate of interest, which is 2.25. So let's say a property is worth 150,000, and 75,000 is excess. So the benefit in kind would be 75,000 times 2.25 times number of months. If it's 12, then there's no need to time it with the number of months. If the house was owned by employer for more than 6 years before occupation by the employee, then the market value of the at the occupation may be substituted at cost, and that would be, I think, a more reasonable thing to do in this case. Let's look at an example. As from 1st January 2020, an employee is provided by his employer with the use of a house which has an annual value of £5,300. The following information is relevant. The employer bought the house in 2017, so that's not more than 6 years ago, at a cost of 270,000 and spent 35,000 on improvement in 2018. So basically, these will be added to the cost of the house. A further 10,000 was spent on improvement in July 2020. The rule is if the money is spent in the tax year, that will not be added. So it has to be before the tax year we are talking about. Okay, so and then the employee pays 3,000 per annum to his employee in relation to this benefit. So the calculation, if you see, it's we have annual value of 5,300, and then we add the excess of because it's a living accommodation. So the excess is 270 plus 35 minus 75 times 2.25. We get the total benefit of 10,475 less employee contribution. So the taxable benefit is £7,475. No taxable benefit arises if it's job-related accommodation, and I think VC's is job-related, and the reason is quite customary. So the three reasons: one, if it's necessary for the proper performance of the duties of the employment. I think army, you can talk about army soldiers when they are in their barracks. That is accommodation provided by the employer. If you know somebody who works on an oil rig, those people go there for 28 days rota or 14 days rota, and they stay there. So that is part of the employment, a part of the package, and if it's necessary for the better performance of duties, or for security reason, in that case there is no accommodation related expense, job related only. However, for ancillary services, you pay the benefit for benefit in kind for ancillary services. However, if so, these are calculated in this case. whatever employers additionally pays for that. So if the accommodation is job related, however, the benefit cannot exceed 10% of employees' net earning. And net earning would mean total income from employment for the year, less deductible expenses. Let's look at example 4 in this case. In 2020-21, an employer provides living accommodation for an employee. The employer also provides the following services in connection with this accommodation, just like our Vice Chancellor: heating, lighting, and cleaning, £1,890. So these are the additional costs to the employer. Repair and maintenance, 1,235, and loan of furniture cost to the employer is £13,000. The employee contributes £100 each towards these services and has net earnings for the year of £42,500. Compute the taxable benefit. It doesn't say, the question doesn't say if this accommodation is job related or not. So the answer gives us both scenarios. So if the accommodation is not job related, the taxable benefit is calculated as by adding 1890 plus 1235 plus 13,000 is the cost of the furniture. And the rule is that for assets loan, which are coming up next, assets loan to the employee, you will pay 20% as benefit in kind. So you add benefit 20% of 13,000, which is 260, and less £1,200, and this gives us sorry, not 260, 2,600 pounds. If the accommodation is job related, the taxable benefit is limited to 10% of £42,500, less 1,200, obviously the contribution made by the employees.